Today, we're going to answer the question, what is payroll tax? Payroll tax. So when you have employees that you're paying through payroll as W-2 employees, that means that half of the 15.3% Social Security and Medicare taxes will be paid by the employee directly from their wages, and the other half will be paid by your business. So every time a payroll is run, let's use wages of $2,000 for the example, $306 needs to be held back and paid directly to the IRS for Social Security and Medicare taxes. So that leaves the employee with take-home pay of about $48,000 for the entire year, even though their gross wages were $52,000. And keep in mind the $48,000 is before paying any other taxes, like federal income taxes, state taxes, local taxes. On the employer side, you have an expense on your books of $52,000 for wages paid during the year, and $3,978 for payroll taxes that you paid on behalf of the employee. So that means that Social Security and Medicare are now $7,956 richer because you paid half and your employee paid half. So a reminder that payroll taxes, Social Security and Medicare taxes have nothing to do with federal income taxes. Those are entirely separate. Payroll taxes are Social Security and Medicare taxes, the two taxes that a business owner is required to pay on behalf of their employee. The responsibility to deposit the withheld amounts is on the employer, which is your business. If the deposits are not made timely or not made fully, this can lead to serious problems for your business, your employees, and also for yourself personally. Failure to deposit fees can be up to 15% for not making these deposits on time. And collections by the IRS happen much more quickly for payroll tax debt than any other IRS debt. This is why it's recommended that you hire a payroll company to ensure that correct amounts are being withheld and that the amounts are being remitted timely and accurately. Social Security and Medicare taxes are the biggest in terms of percentage. However, there are also various other state and local taxes and withholdings to consider based on where you operate, where the employee lives, where you're doing business, etc. It's one of the biggest areas where business owners get jammed up because one mistake or misfiling can be a huge headache to correct. Self-employed business owners who own a pass-through entity that's not an S corporation also pay payroll taxes, but they're called self-employment taxes, and they're due to be paid either as tax estimates during the year or when your taxes are filed in April. For self-employed business owners, there is no requirement to pay self-employment taxes on a set schedule like there is with payroll. Just know that even if you don't pay payroll, you're still paying payroll taxes. If you found this video helpful, we're real accountants and CPAs who work with hundreds of small business owners just like you every day. Check us out at engagecpas.com to see if we're a good fit for your business. We also have business courses available to help small business owners understand their business. They're for you to learn about your financials, your taxes, how to pick the right entity, tax myths, and everything else about your business. Learn at your own pace. Check those courses out on the Education tab on our website. You can also find us on Instagram at Engage CPAs.